been a busy month for the primary markets with a record number of IPO launches. And as July is coming to an end, it's leaving us with one last IPO to watch this month, and that is Rolex rings. Let's tell you a bit more about the IPO as far as Rolex is concerned. The subscription opens on 28 July and will be closed on the 30th of this month. Price band is between 880 to 890 rupees per share. The total size of the issue is 675 crore rupees. The funds essentially will be utilized for funding long-term working capital requirements and general corporate purposes. So there you have it, the basic details about the IPO. Let's tell you more about the company. It's one of the top 5 forging companies in India in terms of installed capacity. Rolex Rings is a manufacturer and global supplier of hot rolled forged and machine bearing rings and auto components. Within the auto sector, it supplies to two-wheeler players, passenger vehicles, CVs, off-highway vehicles, and even electric vehicles. It also caters to industrial machinery, wind turbines, and railways, among other segments. It's among the key manufacturers of bearing rings in India, and it also caters to most leading bearing companies in the country. In fact, in FY21, Rolex Rings supplied bearing rings and automotive components to more than 60 customers in 17 countries located across the US, Europe, India. In fact, 70% of the large, or rather the 10 large customers in FY21 have been with Rolex Rings for more than a decade. It has 3 manufacturing units in Rajkot with an annual achievable capacity of 1.44 lakh MTPA in forging and 6.9 crore parts per annum in machining segment. Let's talk about who its listed peers are. You can peg it against the likes of a Bharat Forge, Ramakrishna Forgings and an Forgings. Moving on to the financials, Rolex Rings has been able to significantly improve its financial profile, with the debt to equity ratio improving from 1.79 times as at March end 2019 March, that is, to 0.70 times as of end of March 2021. It earned a profit of 87 crores in FY21 on a revenue of 616 crores, a profit of 53 crores on revenue of 666 crores in FY20. So what are its core strengths? Well, it has a comprehensive product portfolio to start with. Its manufacturing capabilities offer scale, flexibility and an advantage in terms of location. It has long-standing customer relationships and a geographical diversified revenue base. In fact, the company is planning to focus further or continue its focus on increasing share of business from existing customers by widening the portfolio of products that it offers, that it manufactures and supplies. Another advantage is the fact that the company's promoters and management teams are experienced and they have strong domain expertise. Rolex Rings aims to continue to improve profitability by constant cost optimization, improving product mix by enhancing contribution of higher value-added machine products, and it's also focusing on increasing capacity utilization. Now on to the risks to watch out for. The company, if you remember, defaulted in payment of certain loans in the past and had approached CDR Cell for restructuring debt in FY13. It is highly dependent on top 10 customers for its revenue. Since FY19, these top 10 customers have consistently accounted for more than 65% of the revenue that comes in from operations. Now on to the most important part, the valuations. Considering FY21 adjusted EPS of 31.93 on post-issue basis, the company is likely to list at a PE of 28x with a market cap of close to 2,400 crores. Whereas RK Forgings and Forgings trading at PE of 123x and 37x respectively. Therefore, Rolex Rings valuation seem quite reasonable compared to listed peers. But definitely something that makes us a bit cautious. Some important risks to watch will be client concentration risk and CDR debt restructuring that has taken place in the past. So there you have it, the pros and the cons of Rolex Rings before you finalize and decide whether you want to subscribe or not.